we stayed very focused on deep value add, even if the property was cash flowing from day one.
Hello, everybody. Jake Senzino, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, chef, father, six, and best-selling author, the G-Daddy, Gino Barbaro. Gino, how you doing?
Jake, I'm wearing your favorite shirt today. That's all I got to say. I got to bring some colorful
good,
into your life.
baby. Looking good.
You like that, huh?
Hey, man, we got a great shirt and a great guest today. Today's guest is Will Crozier. He is a real estate broker and has co-founded 2 multifamily investment firms in Texas since 2011. He's also syndicated over $500 million and over 5,000 apartments. That's a lot of homes for folks, Gino.
Yes.
After selling the majority of his commercial real estate holdings and startup company, Will concentrated his efforts into founding Angel Capitalist and sits on the board of directors for multiple foundations that help children in need in the Philippines. So without further ado, Will, welcome to the show.
Guys, very good to be here.
So that is you got a lot to unpack there, but so many people, for them, it's getting started and starting that real estate journey. Can you unpack what it took for you to get in the game and to actually start doing large scale syndications?
Sure. I was going to school trying to do that whole path. My whole family did that, and I was trying to go and do the normal thing, but I couldn't really afford my tuition after a while. So I started actually flipping old muscle cars in Southern California.
Ooh.
That was like my side hustle to pay for everything. Turned out that started making too much money, and it was doing way better than I ever would have done if I graduated with my engineering degree. So that caught my attention, and it scared everybody because I'm like, let me put the education on hold for a bit and let me go flush this out, see where it goes. It just kept getting bigger and bigger. Eventually, I saw that I was kind of running on that treadmill, that hamster wheel. I wasn't doing big deals, and I was looking around. I was like, real estate, that seems all right. Seems like those deals are bigger. I'll go buy a house instead of a car. So I added a 0 to my transaction size and started flipping houses in Southern California around year 2000 or so. And that was doing fine, but eventually I was selling piece of junk $700,000 houses in Southern California in about 2005. And I'm like, saw the writing on the wall, or on the side of the freeway, however you put it. And it just made no economic sense. So I sold everything, cleared out. I looked around the country and moved to Texas. It looked like a place that was going to do things, and I really liked it. Moved to Texas and tried flipping houses, and it didn't really work because suddenly I'm flipping $70,000 houses instead of $700,000 houses. So I moved to 0. Like, okay, we're going the wrong way. Oops. So kind of to long story short, I met some people who were doing rental houses. I was interested in that, but financing for multifamily deals was just becoming a thing again for value add. And around the year 2011, after the big crash, people started actually funding multifamily deals. So my first apartment deal was a 77-unit apartment complex in DFW. Bought it for about $13K a door. It was a late 70s product. It seemed like something I should do. So I dumped everything I had, every last penny I had into that deal. And it was a full recourse loan, and just bet it all on that farm. And it did really, really well. In 13 months, I think we made 130% return on our money. And that kind of kicked it off and started full scale syndication at that point.
It's now worth $150 a door, that kind of deal.
Yeah, exactly. Those were the days.
Well, so let me go back to the car flipping. Was that a passion of yours, Will?
Yeah, I love cars. I adore them. And so it was a lot of fun, and it got me up every day and excited to do work and to do business.
So what were the learning lessons from that business not being able to make it? Because my partner, Jake, likes to say, sometimes when you follow your passion, it doesn't coincide with business, and you lose the passion for doing it. Did you lose the passion for cars once you were in the grind and you're like, I'm not making the money there?
Yeah, I think everyone does in that situation. It was just like, it's just a widget at that point. After a while, It's like, oh, same paint, same vendor. It's just cycles, like revolution.
Mm-hmm. And why couldn't you scale that business up?
I'm sure there's people who do scale that. To me, it was just, I didn't have the right connections. I couldn't really borrow money easily. I couldn't get investors easily. It's just no one really wanted to push a lot of money into that business behind me. Whereas real estate is so simple to get, passive investors or lenders on your business. So that was a lot of hurdles there.
So you got two jabronis on the podcast right now, Jake and Gino. You make a 77 unit deal, like, oh yeah, I just bought a 77 unit deal, 17 a door, and it took us 18 months to find our first 25 unit deal. I mean, what stood out to you getting the deal? I understand everyone says, well, back then there were tons of deals. Let me remind all of the listeners, back then GDP was probably 0.5%. Unemployment was really high. Rents were like $300 for a one bedroom. There was no capital out there. There was no enthusiasm out there. So, okay, you have a lot of deals, but did you have the other side of the equation?
Did you have deals though? Because the rents were way lower at that point too, and
the risk was there,
and the whole lending was a whole different ball game. So hindsight's 2020, my friend.
Yeah. So my question is, how did you find the deal? How did you get the audacity, or I don't want to say the balls to do that deal? Because not doing a deal and then jumping in and doing 77 units in your first deal can be challenging.
Sure, we had an interesting dynamic in Dallas, where it became sort of the joke. Like, the dream was to find the California owner who was absentee. They bought it, used it as an ATM machine, just sucked every last dollar out, didn't reinvest anything. And that was sort of what everyone was joking on the side. And that's exactly what we found. A guy who had bought it on a 1031. He'd like rolled from a fourplex into like 77 units in Dallas and just like sucked it dry. And it was pretty easy to fix the thing because we saw the problem. There was no money going into it. There was no love. She just hired some manager that didn't really care that much. And so it just needed love. They needed some capital infusion. And I literally lived on site. I had sold my house. When I said I put it all in, I put it all in. I sold my house. I downgraded my car, and I just moved into one of the abandoned units and lived there and just micromanaged.
Dude, that
everything.
is awesome. I love that.
I walk around looking at which lights are on at night, which ones aren't, replacing the LEDs and all this stuff. Like it was a fun time. It was an amazing time. And so it was just one of those situations where I was the California owner, and we went in with 60% leverage, like, so super low leverage. But it was only I think a 1.3 million transaction price. So the down payment was not a lot. It was an interesting time.
Mm-hmm. And what is your, I guess, strategy? Are you buy and holder? Are you refi? Or do you sell, flipper? What was your strategy back then and now?
I was a car flipper. I was a house flipper, and that made me an apartment flipper. So I just get in and get out as fast as I could. And it was a good, I stumbled into the right market at the right time for that strategy. These days, I hold a much, much longer, refining for 10 and 12 years and stuff. But back then I had no money really. So just flip, level up. And now holding a lot more.
And so what was your next deal after
that? 244 units in Dallas.
Damn. Leveled up quick, man.
But again, it was like $13K a door.
What's that worth today? Just out of curiosity, per door, do you think?
I think it's trading just under 100, just right there. It's
how much did you get out at the first time?
I'm sorry. We set the new bench there, the benchmark. I think we sold at 44 on the first deal. So nice. So we bought at 13. I think we put like 6 into it and sold for 44. The next one we bought for 13. I think we sold for 55. And
that's the 200 unit one?
Yeah.
That's so sick, dude.
So what learning lessons? Because everyone listening to this right now is, he bought him at 13 a door. You can't do this in this market. You must have learned a lot of stuff going through these deals, and even made mistakes and probably left money on the table, and maybe said, hey, I shouldn't even have sold those assets. Looking back at that, what mistakes do you think you made on those deals?
Sure. Selling any of them made zero sense looking back at it, because it's like they just would have kept going up and up and up. Like, wow, like that would have been a dream to sell. So, but at the time, everything's different and it changes. But yes, the market's different today. But what I learned a little further in was buying these heavy value add that didn't cash flow anything the entire time I owned them. That wasn't such a great plan, because deeper into my career, I started buying stuff, Fannie Mae loans. They were 95% occupied. They would cash flow from day one, and we still made those huge returns through just value add, just upgrading interiors, repositioning the assets, and getting better management. So why not get non-recourse, heavy leverage, cash flow from day one and like get it all. Like that's what I found. And those deals are available today and we're doing them all the time still.
Wow. Jake, if it don't cash flow,
Let the grass grow, baby. That's it.
that's what we say. And the other acronym that we like to use is the ROE, the return on effort. You're putting a lot of effort into those deals, and it's okay. It's called an inflection growth, and it's called Will Crozier growth, right? Because in the beginning, you don't know what you don't know when you first start out. The I'm a mentality. I'm going to do this. I'm going to go shut the lights off. I'm going to throw the garbage out. I'm over there is going to ride the tractor and cut the grass. That's all great, but you have to go through that before you become that next iteration of yourself. Where was that next iteration of yourself? At what unit count did you say you think you had the next inflection point in your life?
It sort of was along the time where we're buying stabilized assets, when it was moving to agency debt, when we had to make a choice: are we going to self-manage these things completely? Are we going to have some third-party management? It's those decisions where it's like, am I scaling or am I staying right where I'm comfortable in what I'm doing? So it was when we decided to scale and to take it to the next level.
So good. I know Jake loves to talk about scaling. Give us some tips on scaling the business. Because for us, for me, my mantra is revenue is vanity, profit margin is sanity, and cash is king. So we're not looking to buy thousands of units a year. We're vertically integrated. We have a property management company. This is important for everybody to hear out there. Will Crozier has his business plan, his ideas. Jake and Gino, we're looking to buy 2 or 3 good deals a year, 500 units to 1,000, because the Chick-fil-A founder, Truett Cathy, you don't want to outgrow your infrastructure. If you outgrow your infrastructure and keep putting debt on and growing like a lot of companies, you're going to blow up eventually. So you need to know what you want. So what was your plan? What did you guys want to do?
I stayed very focused. We stayed very focused on deep value add, even if the property was cash flowing from day one. So the margins were just there. Like we had to do very, very poorly in executing our plan not to make very, very good revenue, profit, and then cash on the deal. So the inherent nature of the deals we were attacking had huge margin in them. For scaling, we did a combination of things. It was self-managed a lot. We tried to outsource our construction crews, but it didn't work. And on value add, you kind of are just a construction company. At the end of the day, like that's the huge focus of what we're doing. So we had to in-house our own crews, spend lots and lots of time with them, have the right leaders in place there. I started a materials import company out of China. I went and spent a lot of time in China, going to the factory, started just importing containers, flooring and lights and faucets and just everything you need for a value add C+ property in the Dallas region. Got warehouses and racking and forklifts and just like you guys said, just like took every individual part of the company and either said, let's bring it in or let's keep that out. And then started scaling with our syndication, just kept meeting more brokers for the debt, started meeting more people that could invest in our deals and just took it up that way.
And how many years do you think it took you to scale the operation? Because everyone's going to think, oh, this is going to take 10 or 15 years to do something like this. How long did it take you to scale?
Inherently, by the way we did our deals, the first was 77, second one was 244, the next one was 440, the next one was 656, and then we went to portfolios. So we just organically scaled, and we just didn't let off that pressure, just kept growing. So we just scaled, I guess, from day one. But like what you were saying, it was never like we just got to get big. We just got to do it. It was just we were following what resources, what deals became available, what investors we were attracting. It was a pretty organic growth, really.
I think it was the same for us, Jake and I. We ended up at about 600 units, getting a regional manager and saying, we need to scale up. We got property management software. We started really becoming professional. And then about 1,000 units, we started syndicating deals. And then from there, what Jake likes to affectionately call the CapEx crew, bringing in flooring in-house and all that. And it can be a 5 to 6 year growth. It doesn't have to take a decade or two, as long as you get focused on what you're looking to buy. And it sounds like you're really focused on saying no to a lot of stuff and saying yes on this is my, particular asset that I'm looking for. What are you currently looking for now? What markets are you investing in now?
Still in Texas. I like being in my own backyard as much as possible. Gone outside a little bit on that. But generally speaking, it's, over 300 all the way up to 3,000 units if it's a portfolio at a time. Of course, just interior renovations is what we've really focused on. We do a great job on those. That bumps rents, it pushes rents. We've learned to control costs on that. That's really what we go after. 80s product. I think we just bought some early 90s, so vintage is getting a little bit newer, but that's what we're at.
And it's funny, that's part of the market cycle where we're at right now. Everybody, it's the three pillars of real estate. It's market cycle, debt, and exit strategy. So Will's looking at that CapEx tsunami. When you're buying these older assets, the 70s and 60s, they have, cast iron plumbing, and they've got a lot of roof issues and driveways, and you're buying them at a 4 cap. You can't overpay in this part of the market cycle. So you'd rather buy an asset that's newer, that has a lot less CapEx involved in it, and taking less risks. So you don't have to worry about it. You're basically buying it at the same price point that you would be buying at a C property, right? So right. I think that's important. What's your favorite part of the business? What do you really like to do in the multifamily business?
I enjoy working with investors. Our investors are not institutional investors. We syndicate mostly out of fairly simple accredited investors. That might sound like an oxymoron to most, but it doesn't take that much to be an accredited investor in this country. Mm-hmm. And so, we're dealing with a lot of dentists. We're dealing with a lot of engineers, a few doctors. So there are people who are really, trying to get additional revenue, safer revenue, try to set up for a better retirement or an early retirement. So dealing with them, I've made many just super close friends and dealing with them, and I really enjoy it.
What did that first raise look like for you?
It was meeting at a corner bakery. Yeah. The real challenge was getting our guarantor because it was a full recourse loan. Uh-huh. And they wanted post-injection liquidity of whatever the debt was. So we needed someone not only to put a lot of money in the deal, but still have a lot of money out of the deal and was pledging that in case we screwed the whole deal up. And we didn't have anybody like that. There wasn't like an uncle we could call. So we found this guy. It's like, why are you doing this, man? Actually, I just last summer visited him in just north of Lisbon, Portugal, where he retired 5 years ago. He's living on the beach, just cycling every day and loving life. So we did okay by this guy. He made the right bet. But met him there, and he's just like, I like your business plan, but I want to hear how serious you are about it. Like, are you working a full-time job? What other projects are you working on? And what it all kind of boiled down to was, if this thing goes sideways, every penny I've got in this deal, I'm also signing on it. I'm not this big red flag like you are, but for the bull, like, they're going to come after you first, but they're also going to come after me. I have to make this work. If it requires it, I'm going to get the chicken suit and spin the sign out front of the property because this has to work. I'm betting it all on this. Like, all right, let's do it.
Wow. And what tips do you have for the listeners as far as raising capital, even on the first deal or even going on? Because we've done 3 syndications. We like to buy on our own, and we've all done 506Bs. We've all done sophisticated investors. We haven't gone to that accredited route yet. So what would you say to an investor listening who's going to do their first raise?
This will make everyone probably cringe. I don't know a lot of backgrounds, but I really hate sort of networking, and I really hate sort of the guru scene and all of that. Like, I don't like it, but it has its place. Boy, does it have its place. I would hate to go out and try to raise capital for one of my deals just to the general public. Like, that's a bit daunting. But if you can reduce the size of that, and you can get into different groups, real estate investment groups, networking groups, if you can get in with people who instruct on multifamily, it puts you in the same vernacular. You're speaking the same words. You're talking about the concepts the same way, and people know you know other people, and it gets it down to a much smaller group of people, and it helps you communicate much easier and build those relationships of trust with them, and to get them to actually invest in your deal. I don't know how you can really practically do that without a huge resume to the general public.
Mm-hmm. And how do you present to doctors and dentists and lawyers and all these other groups that are high net worth individuals, but don't have the opportunity to invest in real estate?
So I joined the real estate networking groups that they belong to. And in a quick order, they started, chasing me, started chasing us, because they wanted to do the kind of deals with the big capital gains or these things. So the first two, as I said, meeting at the corner bakery and basically begging, that's how the first one went. The second one was fairly easily. After the third, money's chasing you in those groups. They're lining up to guarantor those, to KP those deals. They'll follow you around with their check, and you start telling them, no, I don't want you to be a 20% owner. I want you to own 10% max. So you start turning down some folks too, or reducing their investment.
Were you using social media as well at the time? Did you write any books? Did you do YouTube videos, LinkedIn, any social media?
Very little. Most of it was with word of mouth, with DFW investment groups, Dallas Fort Worth investment groups here in Texas. Did some traveling to do case studies, and they put you up on stage, and so it was more of a person to person kind of networking.
And your business plan must have been crystal clear when you said it to them. Now, share with me the opportunity, because most students that we have get caught up. How do I present this opportunity to my family member or my friend? They know me as Gino, the pizza guy. Yeah. Now it's Gino, the multifamily investor. How did you do that?
I'm a really simple guy, and it's too complicated, and I start to lose it, and I don't know what I'm talking about anymore. So all of my business plans and the projects and apartments that I would go after, you could really size them up, on the back of the napkin. It's that kind of a thing. Like if my spreadsheet got too big and too elaborate and there was just way too much going on, I knew it probably wasn't a good deal, because it took all of that to say, okay, this thing is going to work. If I could simply go, okay, rents are here, I'm going to bring them here, I'm going to spend this amount on it, the property will be worth this. If you could just boil it down to these super, super simple components, that's how I found myself speaking, guys, I'm putting all my money in this deal, literally all of it. Here's my, my personal financial sheet. Here's my credit report. I'm betting it all. I really believe in this deal. And it's because of these very, very simple, clear components. And that's how I usually broke it down.
Now, this is why we have Will Crozier on the podcast, because he's speaking Jake and Gino's language. It's back of the napkin, baby. If you can't have it here, you're buying 50 a door, putting 5 in. You're into it for 60. It's worth 80. I'm going to refi. It's just, sometimes we do overcomplicate things, don't you think?
Oh, absolutely. Yeah. And they'll be like, okay, we won't make any money on this thing at all, but someday when we refinance the thing and rates are lower and the cap rate keeps dropping, we're going to make all this cash. I'm like, oh.
I love that. What do you see the future of multifamily going?
I kind of subscribe to the muddle through economics philosophy. I don't think we have huge crashes. I don't think things are going to keep going up. I think we're going to be kind of stalled out for like 10 years, kind of like the Japanese 90 dead decade thing. Like, I just don't see that there's any huge crashes or booms coming our way.
So where are you going to be repositioning assets? Are you going to continue to invest in the space?
I am. I'm diversifying my my overall assets, my overall portfolio a little bit out of multifamily, but certainly not abandoning it. I'll probably keep 40% or so in the multifamily space, something that cash flows and with some value add component.
Last question before we go to the short answers. If I'm listening to this, what are the 1 or 2 top things that I need to do if I want to start investing in multifamily right now?
It's a people game, man. Go out and meet people. And that was so awkward for me. I hated that. I felt so uncomfortable and insecure when I started this thing. And I'm like, who's going to listen to me? So I just literally forced myself out of it, grab a drink before I went into the networking thing, just like courage. It was like asking girls out or whatever. It's just really nerve-wracking, but you had to do it. You cannot do it's not that it's difficult to do it alone. It's impossible to do it alone.
Team sport, baby.
I love that.
All right, guys, let's take a quick time out to hear from our sponsor.
Are you looking for ways to improve your life?
Here at Jake and Gino, our mission is to empower students through financial education and the vehicle of multifamily investing.
Yes, Jake. We agree that a person with financial intelligence can change the world for the better.
We've created our proprietary 3-step framework, buy right, manage right, and finance right, that we teach to our community. This framework, along with education, our one-on-one mentorship, on-site boot camps, and the amazing community has propelled our students to massive success.
We've all been there. We've had so many students that have been able to shift their mindset, overcome limiting beliefs, and set a clear path to achieve their goals. Whether you're currently fixing and flipping, wholesaling, or buying single family rentals, and you know that multifamily investing is the right vehicle for you, I encourage you to visit jakeandgino.com/apply to schedule your complimentary consultation with our team. And I want to let you know this isn't a high pressure sales call. It's really just a discovery call to get to know each other better and see if we're a good fit for working together. And if for any reason we're not a good fit, our team has tons of resources we will share with you to help you along your journey.
If you're ready to stop spinning your wheels, go to jakeandgino.com/apply and schedule your call now. All right, we're back. So on the personal habit front, is there something that you do on a daily basis, any habit or ritual that has led to your success?
Certainly I jog every morning and I got my wireless headphones on, and so I'm just consuming content by people that I really respect, and that's not always business. Sometimes it's just philosophy and happiness and these sorts of things, but listening to people who are a hell of a lot smarter than I am, and doing it daily along with working out, it's a good habit. It's really worked well for me.
Little mind and body mix. So what's
Yeah.
someone that's lit your ass on fire recently, a book or a podcast or something that's really moved the needle for you?
I'm all over the place, but I really enjoy anything Naval Ravikant says. He's angel list. He's a venture capitalist guy, really into philosophy, happiness, and business. So I love that dude.
Is it more podcast or book?
He's all over the place on different podcasts. So just search Naval Ravikant and he shows up everywhere.
We'll check it out. What project are you excited about right now? And before you answer that, are you currently, or what are you currently holding for multifamily assets? How many do you guys currently own?
I'm very, very focused on transitioning out of day-to-day operations. So personally, right now, I think I've got 2,000 doors, but I'm moving into an advisory role, guarantor role. Just definitely more of a passive kind of capacity. So got a few thousand doors doing that right now, and I plan to increase that.
And so are you involved in the ownership of the management of that, or are you going third party at this point?
At this time, it's third party.
Kind of backing out. Yeah, gotcha. When you're starting out, was there, like, if you could pin one thing on this slowed me down and prevented me from scaling, and it was just a stupid mistake? Like I always tell people, I started mowing the lawn on our first deal. It was like the stupidest thing ever. That may have not been it, but like, was there one thing where you're like, I definitely should not have done that, and that slowed me down?
Once I got my mindset right in multifamily, I did really well. I will just repeat again, because I find it that important, was just, I had a very much a do-it-yourself attitude. I wanted to go on YouTube and just watch the videos and like learn on my own and just be a hermit in my basement. And somehow I thought that would translate to real world results. Instead, getting out there, meeting people, being strong, being bold, and just making your team happen.
And not to freak you out, we have, a large community of real estate investors, and there's so many people that I see with your persona investing in multifamily. So you may feel like, oh, like I'm like the odd duck out. We have so many engineers within the community that are really not social butterflies, and they have to kind of get out of their comfort zone to make it happen. But they do really well because multifamily just makes sense to an analytical brain. And so I think that it's interesting, but I've seen sort of your avatar or persona, time and time again within the groups, because look, they get it. It makes sense, but it's overcoming those limiting beliefs and getting, kind of, not to sound too cliche, but, being comfortable, being uncomfortable, because it's not your natural sort of state of going out there and mingling and schmoozing with folks. But it makes a big difference, because it really is. It is a team sport, whether it's brokers or investors. You need to kind of make those relationships work for you. Yeah.
100%. I mean, when we go tour a property, it's the posse, you bring in your hired guns, and if they don't see these certain people there, they don't know how they can even take you seriously most of the time.
Jake and Will, would you also say that most of us that start out in real estate start out, as Michael Gerber says, the technicians? We want to do it just to do it. And we don't understand that it really is a multifamily. It's becoming an entrepreneur, really building a business and scaling up. So when you bought your first 77 unit deal, you were doing everything. We were doing everything. We just thought, hey, cash flow. That's the only thing Jake and I knew about in the very beginning. I'm making $5,000 a month, $6,000. That's all we're thinking about. We're not thinking about building a business or scaling or all the other multitude of benefits to multifamily. And then once you have that aha moment, it's like, holy crap, I can refi this deal out. I've got cost segregation, and I can hire people to help me out. And I can create what Michael Gerber calls an enterprise, like it's not a business anymore. It becomes an enterprise. That's when I think the game gets interesting.
Oh yeah, for sure. I early on in this career of multifamily, I put everything in it, as I said, and then I 1031 that. I was splitting a tiny management fee at the time. I was probably living off like $1,600 a month. And then we 1031'd again. All of this seemed like a good idea. The technician thing, I felt like maybe I'm trading stocks. Like I can just, work on my spreadsheet. There's no connection with reality. But eventually I'm not bringing any money in. My properties aren't cash flowing. I'm 1031ing these things, literally worth millions and millions on paper, but flat broke living in one of my units.
Dude, that's the way to do it, man.
A trippy situation.
I had a big scale epiphany, like in 2014, 2015, sometime around there. Was there a point where you just realized like, this is what I have to do to scale? And was there a learning process that happened? Because we don't wake up understanding how to basically put an org chart together and, how to have, quarterly priority meetings and run things like the Rockefellers, et cetera. Was there a learning point that happened? Was there someone that said, hey, dude, you got to do it like this, or some type of education that made everything click? Can you kind of go back to that?
I don't think I was ever that smart, like to be that clever, to think in advance on those things. I feel like a lot of it sort of just happened to me, and what a place to be, right? But trying to figure out how our management company was going to grow and get key leaders to fill these spots that are incredibly important to my business. It happened when I just bought the portfolio. Like I bought the portfolio and suddenly I'm like, I guess my management company just like quadrupled in size. And I just got this regional over there, and I've got these 4 new property managers, a full region maintenance guy. Like I bought it. And that infrastructure really, really helped. So I would rather have a great story that makes me seem like a genius or something.
No, but that's not a genius story or anything. But literally, you bought with so much scale that it inherently brought scale with it. And it seems like you just adopted what you're currently taking on.
That's exactly the case.
See, that's much different from ours, because the one thing I'm so envious of your market is, so we primarily invest in East Tennessee, Kentucky, and some of these areas. Very rare to find the 600 unit complex or the 400. You're blessed by having these massive complexes in Texas, and that's one thing that it's fewer and far in between, where it might be 150, 200 units or 250s like the big ones. So it's very interesting kind of scale by default and acquisition that you learn that. So you're probably taking these people into the organization, and they're coaching you up to a certain extent on what good looks like, and they say, well,
Absolutely.
Will, I think we kind of got to do it like this, buddy, right? I'm sure there's some of that going on. Yeah,
we're the boss and we know nothing.
That is the quote of the century. That's going to go on the front of the show notes. So before we hop off, we talked a little bit about the podcast and things. Any book recommendations you want to throw out there that have helped you out in your life?
I'm reading the is it right there? It's the Naval Ravikant encyclopedia. You're just gonna have to check out this.
I'm gonna have to get on Naval. Yeah, Gino, you read them yet or no?
Have not.
Have to check it out. So, all right, cool. Any final words here? How listeners can get a hold of you? Maybe potentially invest with the company, et cetera.
I'm really on Facebook a lot. I'm the Will Crozier there. My main business is CapEx Ventures, so Will at capexventures.com is where I can do business. I'm also involved with what takes most of my time these days is Angel Capitalist. That's orphanage and children's surgeries that I'm running over in Manila right now. So that's where my main focus is. But still doing the multifamily and the the real estate investing and some other stuff on my portfolio.
Cool. Mr. Pink Shirt, what do you got?
Will Crozier goes to college, engineering student. He's flipping cars on the side, and he says, this car flipping thing is doing much better. I like this because I'm making more money, but everyone's telling me to stay here. I'm crazy. But, I just get the taste and try to scale it up. I leave it, scale it up, and then I moved to Dallas, Texas. I was flipping $700,000 homes in California, and now I'm doing $70,000 homes. I'm like, hold on a second. I got to start adding some more zeros there. 2011, buy a 77 unit deal for how much a door? Like 13,000 or 13,000 a door, right? And we all look back and say, wow, Will was lucky. Will was not lucky. Will took action, which a lot of us don't do. And he took risk, and he was a guarantor on that loan. Big difference. That's not luck. That's having
lived in
heart.
The apartment and pushed all in. Okay, he burned the ships.
That's right. And he's on the corner of a bakery trying to beg for money out there. How many of us are willing to do that, right? And get out of our comfort zone and say, you know what? I'm an introvert, but I need to do this. This is what I want to do. Closes on the 77 unit deal, makes over 100% on return on his money, and goes and scales up into a 200 plus unit deal. So how many people can say that, right? It's all about being clear. He doesn't lack motivation. He was lacking clarity, maybe going from that 700,000 to 70,000. Once he got that clarity, all of a sudden game on. So I want to thank Will for being on and for sharing his story and really transitioning into more of seek to serve mentality right now with all his charities and all his charitable work that he's doing. So that's really, an admirable thing that gave up everything and scaling back and willing to help others and everybody. That's what multifamily allows you to do. You want to become an entrepreneur, build a business that can run without you so that you can start focusing on things that you love to do.
Man, he did it. He grew it, and then he's giving back. So well done, sir. Will, thank you so much for your time today. Gino, looking good in that pink shirt. Gentlemen, we'll see you later.
Thanks, Will.
Thank you.